All right. Hi, everybody. I'm Jessica Word, and I'm an associate professor at the School of Public Policy and Leadership at UNLV. I'm really honored to be with you guys today. And today we're going to talk a little bit about how to go beyond great programs. And this is all, of course, courtesy of the Nevada Arts Council and their wonderful support. There are also some handouts and the PowerPoint. We're going to make all those available. I'm pretty sure Erica will drop them in the chat for us. And hopefully sometime soon she'll figure out her technical glitch and, and be able to join us over audio as well. So can everybody hear me? I think the answer was yes, but I just want to make sure. Yeah, okay. And so I'm going to go ahead and start as Patty raised a hand. Patty, do you want to come off mute? Did you have a question or you want to drop it in the chat? Or maybe you were trying to tell me you could hear me fine. All right, so just a tiny bit more about me. I study nonprofits, and particular nonprofit capacity building, in particular around HR. And that's so this is sort of my favorite topic today. And I think a lot of great organizations get a little bit stuck. And so how do we get to sort of the next level? So I'm going to go ahead and start sharing my screen here. I'm going to try to hold most of the questions to the end, just because I think it'll flow a little bit better. But if you have something really that you just can't wait on, go ahead and drop it in the chat or in the Q&A, and I'll try to answer it if it makes sense then. If not, I'll hold it till the end, okay? All right. So a few of you probably know what this is. This is Seven Magic Mountains out in the desert outside of Las Vegas. And it's a popular Instagram spot and also a popular work of art here in Las Vegas. So I'm trying to theme all of my presentations around art in the state. So one of the things that I try to explain to people about why we should invest in sort of building your organizational capacity is this idea of what I call the wobbly stool. We tend to focus a lot on building amazing programs when we build nonprofits, in part because a lot of us come from the programming world. We know a lot about programs, and usually it's the desire to build these programs that gets us to start a nonprofit to begin with. And it's usually the first way to really demonstrate the value of your organization to the donors and to the community is by building these programs. But when we focus on just the programs, it's sort of like building a wobbly stool. If you ever sat on a stool where one leg is slightly longer than the others, or they're all just slightly off kilter, you know that you can sit on it, but it takes a lot of focus and concentration around away from what you are doing. And eventually it may just, topple over and break. So the solution isn't just to constantly struggle to sit there with the stool wobbling underneath you, but to fix the foundation of the stool and to rebalance before you topple to the ground. So today we aren't going to talk that much about programs because most nonprofits, like I said, already have great programs. And those great programs are the start of your foundation, but we really need to build better supports for them as well. Just like the picture of the Seven Magic Mountains on the title slide, each piece needs to be in balance and support the others for the organization to work. And if you joined us 2 weeks ago, you may already know that since we have limited time, I will briefly touch on most of these topics, but we will be following up with some recommended resources that you can reference and draw upon in that handout when you're ready to move forward. And that will also include the PowerPoint slides for your reference as well. And a lot of the handout has curated links that I think are helpful resources that you can go back to later on. All right. So our talk today will have 3 major sections: planning, including business and strategic planning, building our kind of people capacity around staff and volunteers, including the board of directors, which is sort of your most important volunteers, budget and financing, and that includes things like diversification of your finances, and then sort of preparing for audits and really thinking about sort of the next big hurdles as you move forward. All right, so let's start by talking about planning for the future. So there are really two types of planning that we do that are important for nonprofits, and one of which we don't often think about in terms of nonprofits. So the first one we're going to talk about is what we call business and operational planning. So when you start a new organization, it's not unusual to sort of fly by the seat of your pants and go from one minor crisis or one minor one project to another. But once you've started to have more stable operations, you start to think about, well, annually we do these things, and you have sort of your programs sort of lined out and established. It's really time to really think about really planning for the future and planning for stability for your organization. So the first thing I tell organizations is that you want to start with an operational or business plan before you kind of hop into strategic planning. So an operational or business plan just sort of sets out the major pieces of your organization for the year or for 6 months to the year. Again, things have been a little less stable over the last couple of years, so even planning for 6 months can sometimes be a little bit more of a challenge during COVID and the last couple of years of inflation and all sorts of other unexpected things. So a business plan is a way to just systematically answer questions such as, what problems are we trying to solve, which is basically your mission, and what are we trying to achieve in this sort of time period? Also, who is important to getting us there? When do we plan to get there? And how much money and other resources will it take? So this really involves 4 elements. The first is, what are your revenue sources? So where does your money come from? Is it donation, grants, contracts, events? And also, what restrictions or obligations come with those revenues? So usually if somebody gives you money, they want to hold you accountable for that money. And so you want to make sure you plan for those obligations and make sure you're spending money in the appropriate categories. For example, if somebody gives you a donation that can only be spent on programming, that sort of restricts your flexibility. So that's something you want to take into account in your plan. Examining the revenues also might help the organization identify some possible risks, such as too much dependence on events or a single grant as the primary source of revenue. This sort of analysis can help inform strategies to deal with these issues before they become real problems for the organization, such as losing that one grant, which could then potentially close your organization. And we're going to talk more about revenue diversification sort of in the fiscal part of the presentation. The next element is usually a full accounting of the costs of the organization, broken into operational costs, which is also sometimes described as overhead, and program costs. While we know these costs, often laying them out can bring some issues to light, such as a sudden rise in cost of gas has caused an increase in the overhead this year compared to last, or fuel costs for heating the building of your organization is in. While these overruns are not great news, it can help your plan to be more accurate in your budgeting moving forward, and also plan to adjust your asks to donors or funders. If you're going to be reapplying for that grant, you want to make sure that you're building those increased costs into your ask for next year. Finally, the last element is what we call capital structure. This is just an accounting of the distribution of your organization's assets, liabilities, and net assets. So this includes our liquid assets or our cash on hand. This is stuff that we can spend. And our illiquid assets, things like buildings and equipment. So if you run a pottery nonprofit, it's your kiln, your clay, and your raw materials. Again, this is important because if you have too few liquid assets or receivables are the things due to your organization, so money promised through a grant or contract. To pay your near-term costs, this can lead to major issues like not making payroll. A building is great, and it's a wonderful asset to have, but you can't use that asset to pay payrolls or other bills. The plan may also include details about the need for your organization's services, such as a needs assessment, the likelihood that certain funding will be available. So a feasibility study for support. If you're kind of newer as an organization, you may not sort of have thought through where all the money is going to come from, or changes to the organization's technology or staffing that will be needed in the future. So maybe you're going to have to start evaluating what you do, improving its impact, and that may mean you need better tracking software. Or maybe you want to do more things online. What does that mean in terms of your needs for computers and lighting and et cetera, so equipment wise. Another aspect of the business plan could be what we call competitive analysis, describing what other entities may be providing similar services in the nonprofit in your service area and mission, or even what other for-profits you could be competing with. What are their sources of revenue and staffing structures? How are you guys different? And how do their service capacities differ from those of your organization? In other words, what is unique about them that may give them an edge over you, and vice versa. Finally, the business plan should name important assumptions such as the organization's revenue policies. Does your nonprofit have a policy in place to try to build your reserve? The recommendation, and again, this is a recommendation, which many nonprofits work for years to accomplish, is to have at least 6 months of operating cash on hand. And that means 6 months to pay salary, keep the lights on, your rent, et cetera. Again, it usually takes a long time for organizations to get to that point. But it's good to sort of set those goals early on as an organization and to sort of plan towards that end. Okay, so moving on from business plan to a strategic plan. So again, that environmental scan, which we talked about in the previous business plan, can come into play as we begin to think about our strategic plan as well. So a strategic plan is something that helps your organization think about how to get to the future you want and to chart a course to reach that future. It usually lays out a strategy for moving the organization forward over about a 3 to 5 year period. The first elements is what we know as an environmental scan or market analysis, which is similar to the one we did for our business plan. This can be done through what we call a SWOT, strengths, weaknesses, opportunities, and challenges, or threats. And this helps the organization identify its place in the market or community and think strategically. This should be done with your staff, with your board, and maybe even with other stakeholders, because often one of the things that we forget strategically is, as a leader, we may not have all the information we need. So strategic plans ideally should take in through focus groups or even just talking to other people, other people's views of the organization. This helps us to identify those threats so that we can deal with them before they become better. Although it's sometimes hard to hear because it's sort of like hearing criticism of your child, right? If you built the organization, hearing your weaknesses can be difficult, but it's also the only way to improve. The other piece of a strategic plan that's really important is really to clearly define your goals and objectives. And I'm going to talk a little bit more about that on the next slide. And to set out specific actions and identify who's going to be responsible for those actions. Because if we don't assign responsibility, what usually happens is if it's nobody's job, it doesn't get done. So one of the things that I think is really important if you want a strategic plan that actually gets implemented is to actually think about who's in charge of each piece. That could be a board member, it could be a volunteer, it could be a staff member. The other thing is to plan for the resources that you need to actually implement these strategies. Often these strategies are going to have some costs associated with them. What are those costs, and how do we make sure that we're budgeting for those and building those into our operational plan? The other thing is to review and update plans regularly. That can be done by putting these things on your board's agenda and making sure that they get talked about and revisited on a regular basis. It could be item by item or strategy by strategy. This kind of creates automatic deadlines to think about where you are in terms of that process. So in terms of goal setting, this is kind of another one of those things that can be really difficult at first to do well. And this is true for all goal setting. So as an individual, as an organization, what you want to make sure is that you're creating what we call SMART goals. So SMART goals is a set of ideas that are specific. In other words, we can't just say we want to raise more money to grow our organization. We would need to say we want to raise an additional $100,000 to support an additional staff member and the resources we need so we can serve 200 more clients. This makes the goal specific. It also makes it clear when we've achieved that goal. Because again, it's important to celebrate those successes. And if we don't know when we reach those goals, it's hard to celebrate or identify success. The next thing we are concerned about is making sure it's a measurable goal. In other words, it will be clear when you have been successful. Again, being specific helps us make something measurable. In your prior example, it will be clear that you've achieved the goal when you raised the additional money, hired and onboarded the staff member, and expanded services to those clients. The next goal is setting goals that are achievable. So it'd be great to say, I want to raise $1 million next year, but if I've only ever raised 100,000, going from 100,000 to $1 million in a year, unless you have a clear path to get there, is not achievable. So that doesn't mean just setting goals that are easy to reach. They should be somewhat challenging, but within the realm of possibility. We want something that challenges us and pushes us, but doesn't make it feel unattainable. Because one of the things that kind of defeats staff is setting these unrealistic goals, which can be overwhelming, stressful, and especially if they know that they can't get there, they're going to kind of shut off. So you want to make sure you're thinking about the feasibility of those goals and communicating with staff how you think you can get there. So the next attribute of a good goal is making sure the goal is relevant to your mission. You can set a goal to bring in more grants, but if the grants you bring in don't align with your mission, then it isn't relevant to your organization's success and may even be a distraction from that success. So we want to make sure that we're choosing things that are important to our overall strategy and our mission and our vision for the organization in the future. So the final place is making sure to create time-bound or set deadlines for your goals. The old saying is true that a goal without a deadline is just a dream. So think when you can reasonably achieve the goal and set a deadline for doing so. In fact, as you move through the strategic planning process, you'll begin identifying the actions which will help you achieve those goals. And you set sort of intermediate deadlines for those actions. So in 6 months, we want to have a marketing plan in place. In 9 months, we want to launch, do sort of a soft open or public launch. In a year, we want to be here. In 2 years, we want to be here, etc. So if your goal is to raise enough money to buy a building by a certain date, then you would set deadlines associated with each piece of your plan, identifying a site, creating a budget, getting drawings, launching a capital campaign, and then also, again, attaching individuals and assigning responsibility to those goals and deadlines, or even pieces of those goals to different individuals. All right. Now we're going to talk about building people capacity. So people capacity is one of the most important things a nonprofit has. Often we may not have big fancy equipment or buildings, but we have amazing people. And so we need to think about how do we support those people better and how do we build the organization for them and for the long term. So that usually comes in the form of staff, volunteers, and a specific set of volunteers, our board. So when hiring staff, like all employers, nonprofits must comply with all applicable state and federal and local laws. So if you're hiring your first employee, here's a quick checklist of things. You're required to collect and remit payroll taxes to the US Treasury. That includes Social Security, Medicaid, Medicare, and additional Medicare. For-profit employers must also pay federal unemployment tax. 501c3 nonprofit organizations are exempt from federal unemployment tax and do not need to file the related Form 940. Another important issue that has come up a lot in the gig economy is whether your workers are actually employers or independent contractors. It is not unusual as a startup to have mostly contractors or a mix of employees and contractors. So contractors are people that you give a task to, that you define in a contract, but they may not work in your office, and you're not in charge of how they get it done, just that they get it done. So you usually agree on deliverables, but not necessarily how it gets done. But you need to make sure that you're properly classifying those employees, because again, a common mistake is people trying to avoid the complication of all these payroll taxes will try to set up everybody in their office as a contractor. But if you misclassify employees as contractors, you can face legal issues, and it can result in back taxes, fines, and penalties. So there are three elements which determine if an employee is a contractor versus an employee. The first one is behavioral. Does the organization control or have the right to control the worker? In other words, do we tell you how to do things, when you're supposed to be in a particular place, and how you do your job? Financial is the next test. Are aspect of the worker's job controlled by the payer? These include things like how you pay the person, whether expenses are reimbursed. If you're reimbursing expenses, it's usually an employee, not a contractor. And then the type of relationships. Are there written contracts or employee benefits that you're providing? If so, then they're an employee, not a contractor. The other thing is, will the relationship continue, and is the work performed as a key aspect of your organization? If you answer yes to most of these questions, they're an employee, not a contractor. It doesn't matter what your contract says. The IRS can look at that and say that it's not valid. And so you want to make sure that you're really thinking about whether somebody is really an employee versus a contractor. The other important thing is, if they're an employee, they may be due overtime benefits. And so that this is, again, an issue that comes into account, particularly if somebody is an hourly employee versus a salaried employee. So you want to make sure that you're thinking about overtime and the costs of that. And usually, to be salaried, they have to have some supervisory capacity. Okay. The other thing that's an important practice to put in place, again, to avoid legal issues, is creation of an employee or volunteer handbook. As your organization grows, you really want to create clear policies and documents for staff to assure consistency and guidance, and to really make sure people feel like everybody's being treated the same. Sometimes when we don't write these things down, we end up making sort of one-off decisions for particular employees, and this can end up looking like favoritism, even if it's not. So one of the first issues to deal with is, as you're making hiring decisions, you need to make sure that that you're thinking about how you serve your community, and discrimination and bias that can kind of leak into your hiring practices. So we want to think about making sure that your organization looks like the community you're serving, because again, that can be an important part of outreach to your community. So also often putting into place in your employee handbook an anti-discrimination clause, and making it clear that all are welcome in your organization. Another important thing to consider as your staff and volunteer numbers grow is creating a clear set of policies to give them guidance about certain things, such as social media posting, This provides the benefit of not just communicating to employees, but can also provide some defense for legal issues. The handbook doesn't have to be incredibly detailed, but should really have some detail about when somebody can be dismissed and why. So, and what sort of disciplinary procedures are in place. Now, it's often recommended that you have at least some statement about when people can be dismissed immediately. And it's usually, for example, honesty and sobriety requirements like stealing from the register or showing up under the influence for work is usually grounds for immediate dismissal, right? Other examples of terminable offenses usually are related to harassment, such as sexual harassment. And so you want to make sure you put those things in writing and are very clear about those. If you do need to terminate an employee, you should also be careful to document the issues and try to work with the individual to correct those issues if they aren't one of those immediately terminable offenses. And the reason to do that is to help avoid lawsuits in the future. So if a team member is struggling to meet job requirements, ideally you should try to training ahead of termination. And when you plan to terminate someone, you should be careful to do it in private and make sure to stay calm, as often individuals are very upset and take their feelings out on you. So I always tell people to sort of plan ahead, sort of have a plan for what you're going to say, make sure that they're the first person that hears it outside of maybe HR or your board member if you're consulting with them. And really make sure to make it about their performance and not about them as a person. Because it's easy to get sort of caught up in their emotions. It's one of the worst things to do as a boss is to terminate somebody, and can be stressful even when you're unhappy with their performance. The other thing is really thinking about benefits in the long term and how do you keep your employees, because turnover has a high cost. There's a lot of time and energy that goes into finding those right employees, and so we want to keep them as long as we can. So while it may be difficult to offer health insurance and retirement benefits, as your organization grows, you want to really think about building those into your budget, or at least finding ways to offer other benefits such as paid time off or sick leave and vacation days. Studies examining the nonprofit workforce say that while many are initially attracted to the mission, one of the reasons many people stay, other than their love of the work and their love of the community, is the flexibility of their workplaces. And this is particularly important for women who often are in caregiving roles outside of work as well. So if they have kids or other things, this flexibility is so important to sort of juggling all their responsibilities in their lives. And so this can be a key reason that great employees stay. So this can be in the form of paid time off or non-traditional schedules, allowing people to flex their time. And it's something that you should emphasize as a benefit when you're doing recruiting, if this is something you plan to offer, because again, it can be more valuable than salary to lots of people, myself included, by the way. Okay. The next thing that we need to talk about is our boards. And I see something in the chat. How recommended or functional is it to run a nonprofit with just volunteers? And if it is needed to have a manual or contract. So I would say that you probably want to create a volunteer manual as well to answer that question before we move on to board members. And I actually included links about volunteer manuals. Again, you want to give people guidance about what their role is, in part because in an emergency, if you don't give guidance and they step outside of those roles and do something wrong, your organization can be liable. So you want to make sure to train people and to give them guidance about what's acceptable and what's not acceptable. And contrary to popular belief, you should and can fire volunteers who are not showing up on time, aren't doing a good job representing your organization, especially if you're an all volunteer organization. You want to make sure, again, these are the people that everybody sees when they show up at your organization. You want to make sure that they're representing you correctly. And I know it's hard to think about telling somebody who's giving their time freely that they're just not a good fit. But sometimes it's also about moving somebody around versus terminating them. But especially, again, you want to think about what is the line they cannot cross, and outline those things, such as no calling, no show over and over again as a volunteer. That can disrupt your whole operation or lead to health and safety issues, particularly if you're dealing with kids or other populations that where you have particular ratios you need to maintain for safety reasons. And so volunteers, you absolutely want to have a manual and a handbook for them as well. And often you can sort of use some of the policies for employees and volunteers, but there's going to be a slightly different set of guidance based on, obviously, unpaid staff are different than paid staff. But lots of even major organizations run most of their operation with volunteers. If you think about the Girl Scouts of America, the staff numbers that actually make up their national organization are relatively small because they depend so much on volunteers. I used to do some work with the Girl Scouts, which is what I'm talking about them. I imagine the Boy Scouts of America looks the same. A lot of these youth serving, community serving organizations run primarily on volunteers. So they're an important resource. Resources need to be managed. Okay, so we're going to move on to a very important set of volunteers that we often don't think about as volunteers, and that's our board of directors. And the board, we often think about how to recruit them and maybe some of the aspects we want out of a board, but not sort of how to build the board's capacity itself. These are some of our most important and dedicated volunteers. And so we also want to make sure we're thanking those volunteers. But as you transition away from a startup and towards a more stable organization that is more staff run, if you're going to the staff route, it's time to think about the board and more clearly articulating and separating board responsibilities and roles from those of staff and other volunteers. So this list that you can see on the screen here is generally what boards should be doing. They should be developing and maintaining the mission. They should be helping with planning. They should be helping raise money. They should be helping you manage your resources, providing oversight, which means annually evaluating the executive director and key staff, and helping advise on hiring and raises for those key staff, acting as ambassadors to the community for the organization. And so their role really becomes about steering versus rowing as we move towards a more stable, larger organization. And so that means we really need to think about the composition of our boards and how to sort of reconstruct it as we move away from sort of our startup board, which is usually made up of our friends and our family, and maybe the people who helped us start the organization. So what do I mean when I say steering versus rowing? Okay, so if everybody's rowing, which means everybody's just helping move the organization, but nobody's steering, we're doing lots of work, but we may be going in circles. So we need to have a strategy that goes back to that strategic plan idea. And this is an area where the board is supposed to be really an important part of the organization. While executive directors are great, one person rarely has all of the answers. And so we want to use the expertise and the connections of our board and their insights to really help us steer the organization. Now, conversely, if nobody's rowing and nobody's steering, we're also not going anywhere. So again, this is more of a transitional piece, you want to make sure, again, you still have plenty of volunteers to help get you there or staff to help get you there that are going to row. But we need to start thinking about direction. Now, again, this is a balancing act between getting there, but the goal is to have enough people resources through volunteers and staff to do most of the day-to-day work and have enough steering to help us guide our journey and to get us where we want to be. So as we transition, we want the board to take on more of this steering role and the staff to be given the freedom to figure out the day-to-day operations. We can't hold them accountable if we don't give them enough decision-making authority to achieve their goals and to make decisions on a day-to-day basis. Okay. Oops. So one of the ways we can do this is start to define our board roles more clearly and think about how they're different from staff roles. And that means thinking about transitioning away from friends and family as board members so that we have people who are a little bit more objective and have a little bit more independence. And thinking about people who can bring different resources to our organization. So we need to clearly articulate our board roles and make sure that they understand that they're supposed to provide that oversight. It'll be hard at first for the board to let go of the day-to-day because they've been so involved. Usually if you're a startup organization, they're there. They're the first people who volunteer. They're the first people who show up at all the events and pitch in. And that is wonderful to have. But you also want them to be able to focus on the strategy versus the day-to-day. And it's too easy to get caught up in sort of putting out the fires if they're just rowing. So you want them to help you set goals and direction and not figure out how to overcome the daily obstacles. The next issue to consider is term limits for your board. And I know if you have a great board member, why you'd want to limit the idea of letting them go. But this is for the health of the organization and for the sanity of the board member. If this, particularly if you're an all volunteer organization and you have the same board members serving over and over again, eventually they're going to get burned out or lose sort of the drive and the focus on the organization. And so you really want to make them feel like there's a natural end to what they're doing so that they can really commit to that particular time frame. And the other reason to do this is to really get new ideas and new resources that come into the organization and to allow that board member, maybe as they're exiting their board role, to transition into a different volunteer role or even on a committee such as helping with the annual gala or fundraiser. So they can still do things, but maybe they can decrease their involvement for a little while and maybe come back to the board at a later time. This is also a nice way to sort of allow board members who are less valuable to gracefully exit without having to ask them to step away. It also, again, brings new life and new skills, because if we have the same people in the same room talking about the same issues over and over again, we're probably going to get the same answers. So it can be really difficult to solve new challenges or to overcome things that we are stuck on if we only have the same skill sets. Finally, the last issue to consider is if it is time to have a give or get policy. Often what we talk about in terms of boards is that they should be giving time, talent, and treasure, which is time is obviously the most important resource. Talent is their expertise and their skills, and treasure is money. And a give or get policy, it asks board members to set a goal to either give a certain amount in dollars or in-kind goods or services, or raise a certain amount. These policies ask board members to show their commitment to bring resources to the organization. And some funders will even ask you what percentage of your board is giving, even if it's a small amount or driven by their income. Showing that 100% of your board is giving is a powerful message to give to funders, that they believe so much in what you're doing that they're willing to put their money where their mouth is. It's not just about, having those resources. It's also about showing the level of support from your board. Now, Giver gets can also be sensitive to different economic realities. I sit on some boards with some really wealthy people. Obviously, I can't write the same check that they write, but I often give in terms of an in-kind donation. So that's things like helping with an evaluation plan or helping do the strategic plan. And by giving those resources that we would have to otherwise purchase, that's my give. Or by talking to donors about giving to the organization and getting them to open their wallets, that's my give. That's a get, right? That I'm able to raise money for the organization. Board members are often really uncomfortable at first in asking for donations, but it's part of their job. And so you can find ways to sort of start out that fundraising by giving them easy ways to do this, whether that's through inviting other potential donors to events. And sometimes that's why we have these events that sometimes only raise a little bit of money, is to broaden the circle of donors that are involved with our organizations. The other thing we need to do is provide them some training and some resources around fundraising to make it less scary to them. And even if it's just doing a role playing around an ask, where in the room together, they practice asking each other for a donation for the organization, it helps them sort of get over that initial fear. Some people are really gung-ho and don't have a problem asking for money, but most people find it really intimidating. The last piece I'm going to talk about with respect to boards is having them actually own their own performance and doing self-assessments. This helps them as a body think about their own strengths and weaknesses and start to take ownership of their own development. So that may mean taking a self-assessment. I have a link to some of those in that handout again, where they can actually go online and self-assess their capacity as a board and start to think about what are some of the things as a board that we should be setting as goals for ourselves in terms of development, and maybe where do we need to bring in somebody to train us or to give us some additional advice around some of these things. All right, finally, finances and oversight. So as we talked about earlier, our revenue structure is an important piece of our organizational success. And a lot of that has to do with having a good mix of revenues. If we're really dependent on a particular event or a particular source of income, and that source of income goes away, that can be really deadly to our organization, as a lot of organizations unfortunately found out during the pandemic, right? If you're event driven and you only depend on events and suddenly there's a global pandemic and you can't have your events, how do you keep going? And so we really want to think about ways that we can bring different streams of revenue into our organization. And I think arts nonprofits have some advantages in this space, since they often have the ability to generate revenue relevant to their missions through sales of artwork, through performances, through partnerships with even local businesses, as a way to really supplement contracts and grants, which a lot of human service organizations are dependent upon and have a really hard time diversifying away from. But there's a few things we want to think about before we get involved in contracts and grants in particular, and or expanding sort of these revenue generating strategies. The first thing, again, we always want to think about is our mission. Does this activity not just generate revenue, but also serve the cause that we're trying to serve? Will it be a distraction from what you're supposed to be doing or what you want to be doing? And then what are the actual costs? So this is when you have to put your real kind of business hat on and really think about those costs and how those costs can be managed, and to make sure that you're sort of maximizing the profits and minimizing that downside. If it's a grant, you're going to compete for a grant, will the amount allowed in the grant actually cover all the costs? And if not, how will you make up that difference? Will that be through donations? You have to have a plan for making up that difference as well, because sometimes as generous as contracts and grants are, they may not cover the actual full cost. And so we want to make sure that we're thinking about that too. The second issue you have to consider is if you are starting some sort of revenue generating activity, will it result in what we call unrelated business income taxes, or UBIT? These are taxes which nonprofits have to pay the federal government and sometimes state and local governments on activities that aren't related to their exempt purpose. For example, some churches in downtown locations rent their parking lots out during the week to people who need parking in those areas of downtown locations where parking is usually at a premium. But this is considered an unrelated business income, and in most cases would be due, taxes would be due on this revenue. So we want to make sure that if we're doing something like this, that generates enough revenue to be worth all this extra paperwork, and or it's really related to our core mission. So again, arts nonprofits, I think, have a lot of leeway here. You can do arts education related to in your gallery space, and that would be related to your core mission of bringing arts to a particular area. So you just want to think about how you're going to make sure that you can make that case. Even gift shops can sometimes be seen as supportive of your core mission. But it's not just enough that revenue goes back into your programs. It has to be part of your core mission. So almost all nonprofits are required to get, the final thing is the requirement for audits can sometimes come up as your organization grows in size. Almost all nonprofits, once they reach $750,000 in revenue or more, and again, some nonprofits may never get to this place, you are required to have an independent audit. But some funding sources, including contracts and grants, may require audits at a much lower level of funding. So you want to make sure that as you're thinking about that contract or grant, you also factor in the cost of an audit and that you plan for that audit. Audits sound scary, but generally it's really just about making sure that you're following these good financial oversight practices, which we're going to talk about just a little bit more here in a minute. And many auditors I know suggest that before you have an audit, as you're preparing and going through that year, ahead of that audit, you meet with them early in that year so you know what sort of documents you need to retain, what sort of records you need to maintain, and so that audit process becomes much less stressful because you sort of know what to expect. It's not like being audited by the IRS. And usually at the end of the audit, they'll make recommendations about things that you could be doing better to make sure the next audit comes out even better than this one. All right. The next thing we want to think about are some specific issues that come up for nonprofits. And one of those things as you grow, especially if you're an all volunteer-led organization or primarily volunteer-led, that you want to really think about is what we call financial control. Financial controls deal with three things: authorization, recording, and custody. And the reason we want to think about financial controls is people do steal from nonprofits. It's not a great thing that we want to think about or talk about very often. But especially at fundraisers and things like that, we may be dealing with lots of cash. And so we want to think about making sure that we keep those resources safe and that we're kind of protecting those resources that our donors have entrusted to us. So the first thing is authorization. Authorization is the ability to make decisions to spend money. The second thing is what we call recording, and is the review and balance of receipts to financial statements and budgets. So that's writing down how much money we received and how much money is going out. And the last is what we call custody. And custody is just actually receiving checks and cash. And ideally, no one individual should have more than one of these functions. I am the finance person for my daughter's Girl Scout troop. Even I don't get all these things. Can we talk a little bit about how to manage cash? Okay, I'll get to that in a minute. So one of the reasons that we want to have more than one person in charge of money is that we want to make sure if I'm receiving all the checks and the cash, that somebody else is checking and is doing the recording. And doing that makes sure that, that $200 in cash that came in doesn't just go in my pocket. And again, people often don't do this out of spite. It's usually desperation. Maybe they're having a hard time making the rent or whatever. So what we want to do is make sure we keep honest people honest. The other thing is for that authorization piece, often boards set spending limits over which day-to-day cash flows can't be used. And so maybe you have a daily spending limit or weekly spending limit of $500. But make sure that authorization doesn't allow for splitting. So you can't have two different $250 or $249 spending authorizations, because that's what will happen. People will split up the expenditures. The other thing that is often done, particularly with small nonprofits, is they'll assign 2 signers to checks. This is a good thing to do, but it only works if you really have 2 people sign the checks all the time, because all too often, because of trust between 2 individuals and the difficulty in getting 2 people into one place to sign things, somebody will pre-sign a check, and that's essentially getting rid of that control or that ability. So in terms of, tell you what, I'm actually going to deal with the cash management thing after we're done, so I can find out a little bit more about what you want to hear. The other thing is at fundraisers where you may have a lot of cash, you always want to have 2 people that aren't related to each other, aren't friends, working the cash box together, again, to make sure all that cash stays where it's supposed to stay. When the very first nonprofits I worked with here in Las Vegas, when I moved here 15 years ago, got ripped off right before Christmas after a big fundraiser by a volunteer that kind of pocketed about 1/3 of the cash from, which was supposed to go for toys for kids, and that's terrible. And they eventually caught the person, but it still led to a lot of stress and things that were not great. Okay, so moving on. Another thing that is often not thought about and can be a really big deal for nonprofits is what we call restricted gifts. Restricted gifts, actually, there's a requirement from the IRS, and there's a requirement from the IRS and under basically good accounting practices that if somebody restricts a gift, so if they write on the check 4 teddy bears, you can only use that money for teddy bears without going back to them and getting permission. And so you want to make sure that try to encourage donors to trust you and not restrict gifts if you can. But if they restrict the gift and you get a great deal in teddy bears and you only need half of the money they gave you, you can go back to them and ask them for if you can spend it on something else, but you need to get that permission and document that. If not, you have to track that money until it all gets spent on teddy bears. And so those restricted gifts can really tie your hands. And you want to make sure you really track those well. These have led to court battles. So for example, there's a famous court case where Georgia O'Keeffe actually donated some paintings to her former college for display at the college. And that college hit on hard times and was worried that they weren't able to sort of maintain the paintings and wanted to sell them to help their finances. Well, the estate of Georgia O'Keeffe actually sued them and was able to prevent that sale of those assets because they were donated for display at the college, not for sale. And so they weren't an asset that it was a restricted asset, so they couldn't just do that. Now they worked through that and were able to send them out on tour and to do some other things that were creative that were sort of within the boundaries of the gift. But it's something you really want to think about. The last couple things are things that I will briefly talk about here. And one is what we call the Sarbanes-Oxley bill, which came out of the Enron scandal. It requires organizations to not retaliate against whistleblowers, particularly around financial issues. But the bigger issue for nonprofits has to deal with document retention. You need to make sure you have a plan for retaining your financial documents. Similar to your own finances, you want to keep records for about 5 years and then have a standard policy of when and how you're going to destroy those. Because if, for example, there is some sort of scandal and you're under investigation and all of a sudden you're shredding documents, you can face up to 20 years in jail. So again, you want to have a document destruction policy and make sure you're following that policy, particularly if there's some sort of stressful thing or bigger issue going on. The other thing is making sure you have good conflict of interest policies for your board and your volunteers, where you make it clear that they shouldn't be financially benefiting from the organization, and that they recuse themselves from any sort of decision where they could be benefiting. So if your executive director serves on the board, they shouldn't be part of the discussion around their own raise. If a board member has a piece of property the nonprofit wants and is going to sell that to them, make sure that they're not, again, part of that discussion and that it's done at or below market value. Okay, so I'm going to stop talking here and turn this over to questions and open it up, particularly to go back to the one about cash, if you want to come off mute. Just so I can be a little bit more certain about what you're trying to ask.
Hello, can you hear me?
Yes, I can hear you. Richard?
My name is Mario.
Oh, Mark.
We would like to know how to manage cash. And we were told that we needed to first deposit cash in the bank. And then after that, we will be able to use that cash. But I don't know how that works.
So are you asking how do you open a bank account for your organization, or are you asking?
So what is the process to manage this cash? Do we get cash, and what do we do with it? We deposit it in the bank, or we just keep it and use it as we need it?
So it's not unusual to keep a little bit of petty cash on hand, particularly if you're a small organization. But in general, you want to deposit, again, that creates a record of your assets and the cash that you have. And the other thing, especially right now, that organizations, because interest rates are so high, you can actually make a little bit of money if you have a larger cash balance on hand. And so you also want to look at sort of where you can get the most return from that cash if you hold a lot of cash on hand. Now, if you have just, a couple $1,000s, it's just safer in the bank than it is sitting in your office, right? Because, banks are FDIC insured, and it's easier for cash to walk away than for everybody in your organization to have access to your bank account. So even, again, my daughter's Girl Scout troop, this time of year, we're selling cookies, and we have sometimes up to $10,000 or $15,000 in cash. I immediately take all that to the bank. It's so much safer there than at my house. Does that help a little bit?
Yes, it does. Thank you.
And again, you want to think about who has access to the checkbook or the debit card, and placing sort of expenditure limits on those as well. And you can usually set those up with your bank. But it's also not unusual if you have a big event and you may need a little bit of cash to draw that out. And just make sure you keep some sort of receipt, even if it's a handwritten receipt book. Because again, if there's questions later, it's easier to sort of track down and answer those questions. Other questions? And as you get bigger, you might actually want to get a bookkeeper to help you with that as well. So I feel like I talked at y'all for like an hour. Somebody ought to have a question, unless I put you to sleep. I'm going to go back to this other question about all volunteer organizations, and if you need to have a manual or a contract. Some organizations do have actual contracts they ask volunteers to sign, which, sort of outlines those responsibilities. I would do that a little bit more informally and do it through training and ask them to, and a handbook, and ask them to, sign that they read that handbook and they attended the training and understand sort of their responsibilities to the organization. I think contracts can get a little scary unless you're doing something where there's a lot of risk involved, and then a contract makes sense. The other thing a lot of volunteers don't know about, which I say is really important, is they actually have some liability protections under law. And so it's also important to include that in your volunteer manual if you're putting it together. Basically, as long as they're acting within the confines of their duty and not operating a motor vehicle or boat or an airplane, they actually have quite a bit of liability protection under federal law. Are you required to have insurance for volunteers? Again, it's not required by law, but it's good to have some operational insurance. So if, for example, somebody slips or falls and it's usually relatively inexpensive to get insurance to cover volunteers that are acting on site for your organization, or even drive. I would say you just want to make people aware of their risks and their liabilities. So for example, Girl Scouts is on my mind this time of year. They make sure that I know when I'm driving for them that it's my auto insurance, right? And I have to turn in my auto insurance to prove that I have insurance if I'm driving girls in the car. And so make sure people know what risk they're taking on and they understand those risks and liabilities. And for most of the time, again, these are really relatively small, but not insignificant enough to ignore. Okay, any advice or experience with a junior board member? So are you talking about a youth board member? JH? So I'm going to assume you're mean a youth board member. So sometimes early career professionals that do less than a normal board does. Okay, so that's a little bit different. Some organizations also include youth on their board, particularly if they're youth serving. So that's what I was thinking of. Early career professionals, so maybe you're using it as a mentoring piece. I would say, give them, maybe not start them out on the board. And I give this advice to a lot of organizations. Actually start them out on a board committee where they can contribute their skills and sort of grow to know the organization a little bit more. And then also, think about ways to involve them in a way that makes sense for their careers and their professional development. Again, people are more likely to give more to organizations if they see the benefits back. And so I think that those are important things to do. And people talk about working on boards a little bit differently than they do talk about volunteering, but it is volunteer work. And so for all volunteers, it's important to really think about how to progress and grow skills for those volunteers, because those can be just as valuable as the thank yous and the warm feelings that you get. And a lot of people actually do volunteer so they can gain different experience and different and can stretch their skill levels, right? So maybe you're thinking about a career change and you want to get into fundraising, but you've never done it. And one way to do that is to volunteer as board member or to volunteer with an organization and to start to kind of work with your staff around those things. Insurance at an art gallery for volunteers. Again, I would think most of your insurance, again, I'm not an insurance agent, so talk to your insurance agent, at a gallery would be covered by the policy for the space. Because again, most of the things that I would think would happen at a gallery would be like slip and falls and things like that, that have more to do with the space than than sort of the liability of the individual volunteers. But again, I would check with your insurance agent. Another common thing to do is to get D&O insurance, directors and operators insurance, which is actually insurance for your board. Again, it's relatively inexpensive. A lot of nonprofits get it. And it's to, again, if somebody sues the organization and or the board, there's some liability protection for them as well. Y'all are too easy on me if nobody else is going to ask any questions. All right, last call. Erica, I still can't hear you. All right, on that note, I don't know what happened with Erica today. Maybe she's just talked too much over the weekend. I want to thank you all so much for your time and your patience. Again, we thought we had all of our technical glitches worked out after last time, but this was pretty minor. I'm perfectly capable of introducing myself. And so I want to again thank Nevada Arts Council for the invitation and the opportunity to talk to you guys today. You're welcome to reach out to me if you have other questions, and I can try to direct you at some resources. Again, I spent probably way too much time building that little handout with lots of links in it to good resources. In particular, I found over and over again, I was sending you guys to the National Council of Nonprofits, which is sort of a lobbying group, sort of professional group of nonprofits. And they always seem to have really great advice and resources and links to other great resources. So they're always a good place to start. So thank you guys. And hopefully I'll see you in 2 weeks for our last thing, which is about building relationships outwards to your community, which will include some advice on fundraising and advocacy work for your nonprofits. And that is particularly important in these politically divided times. And so we want to think about advocacy and how that plays into our overall strategy. So I look forward to talking to you guys in a couple of weeks if you want to join us again. Thank you for your time. I know y'all are all busy.